Hi there, good afternoon. You're watching Market Fatafat on ET Now. I am Snehisha and this is the show where we'll be taking you through all the top buzzers in today's trading session. Also bring you a technical check on some of those stocks and help you understand why these stocks are in the spotlight today. Before we do that, let's take a quick look at what the markets are up to right now and let's pull up the Nifty and see what's happening on that front. Because remember, we have fallen from the day's high, but we are also now recovering from the day's lowest point and inching towards the day's high. So looking good for the Nifty right now. We're once again back up above the 25,000 mark. Let's see if we're able to scale up to the 25,100 thereabouts that we had seen yesterday. Sensex 0.2% lower. You have India Wix that's fallen by 2.3%. We're at the 16.5 mark now. Very healthy on that front. Nifty Bank absolutely flat, not doing much. A slight hint of a negative bias is what we are seeing on Nifty Bank. But other than that, if you take a look at the advance decline ratio, it's steeply in the favor of the advances today. So at least that is holding up well for the market, and that has been the case ever since the get-go. Let's talk about what the broader markets are up to in today's trade. Remember, yesterday the broader markets have largely underperformed the benchmarks. Today the case has reversed once again. Mid-cap is up 1% as we speak. Nifty small-cap index also once again leading the charge from the front. Almost a 2% gain coming in. So it's basically the days where the index has been lackluster. You have the broader markets that have shown strength, showed some resilience, and on the back of that, the overall market momentum continues to stay positive. Sectorally, let's take a look at what's happening. It's a mixed move coming in. Nifty Realty is the biggest winner today, followed by Energy, Media, Auto, FMCG and PSU banks. On the flip side, Nifty IT, biggest loser today, 0.8% cut on that one, followed by Nifty Metal and Pharma. These are the three indices in the red, and all the other sectoral indices are in the green as we speak. But that's the lowdown on the market right now. Let's get kick-started with the show, and on the technicals right now, let's welcome Vikas Jain, Head of Research at Reliance Securities, and from our in-house research team, we have Rabinder who's joining us. Good afternoon to both you gentlemen. Let me start by talking about the first stock that's up and away in today's trading session, and that's CG Consumer. Crompton Reeves Consumer Electricals, that is. Numbers were largely missed versus street estimates. But if we take a look at the earnings fine print, revenue has come in at 1,879 crores, which is up 5%. EBITDA is also 9% here on here. Net profit has come in at 171 crores, which is an uptick of 6%. EBITDA margins too have expanded 13.1% compared to 12.5%. Also, what's done very well for the company this time is Butterfly. They are a kitchen appliances segment. Butterfly, the net profit over there has come at 9 crores compared to a loss of 20 crores this time last year. So that has inched back into profitability this quarter. Lighting margins have gone up by 700 bips, so that is also looking good. But the two key reasons why the stock is soaring so much in today's trade is because the company has announced a greenfield project to expand manufacturing capacities and product capability. The first phase of this project will cost 350 crores. And it will focus on fans with future expansion into other product lines. Secondly, the company is also focusing on expanding its presence within the rapidly growing solar rooftop market. They've announced their foray into there and said that the total addressable market of the same is 20,000 crore rupees. So big opportunities coming up for Crompton, very strong growth plan going ahead. And we also chatted with the management earlier wherein they spoke about their earnings trajectory and the outlook going ahead. Let's go across and listen in to a snippet of that chat.
Consistently over last 6 to 8 quarters, we have been doing this in ceiling fans, where we had a BEE 1.0 energy transition, which led to significant amount of input cost increase. So that is something we have been judiciously passing on. Price increase has never been our first option. We always evaluated what kind of cost activities we can undertake to ensure that the burden is not passed on to consumer. After carefully evaluating all those things, wherever there was price increase required, we have done it bite-sized in ceiling fans. Last quarter, we took a small price increase in our non-ceiling TPW fans also. We are a very strong balance sheet company. We are net cash positive. Just to talk about the cash flow generation, we acquired Butterfly about 3 years back for 2,000 crores, and in about 3 years, almost the entire debt has been paid off. So cash accruals are very high, and we'll be using the internal cash accruals for this. We expect our fans category to grow well. And as you would know, we are today the world's largest manufacturer of fan. And the scale at which we operate and even the way at which we grew last year, that means we are going to add 1 to 2 million fans every year. That is significantly higher, and it's probably as large as some of the entry-level players in the fan segment.
Okay, so that's the take on the management's word coming in on Crompton Greaves Electrical. That stock up almost 8% as we speak. But let's move on, and because ABB India is the stock that you've picked out for us. Last 6 months, the stock has given a cut of 12%. Last 1 year also, the stock was lower by 30%. Do you believe that this is the end of the consolidation for the stock, and now that the stock has cooled off slightly, we can see some good levels going ahead?
Look at this stock was one of the strongest performer for calendar year 2024, and since 2025 the stock has been in a grinding phase. But we believe the stock has the potential to regain its glory. The stock has continuously making higher tops on the daily charts and the weekly charts. So we believe the stock is poised for a stronger breakout from current levels. The relative strength indicator also points for a strong up move. The stock has just crossed today's 100-day average with strong amount of volumes, and week on week the participation has been increasing in the capital goods space like ABB, Siemens or Cummins. We believe the ABB would see strong amount of up move and test the higher band of near to 6350 to 6500 levels. So we are fairly positive on the stock. On the downside, the stock has multiple support near to 5650 to 5700 levels.
Okay, so that's the take on ABB India. Key levels to watch out for. Ravinder, Bajaj Auto is the stock that you've picked out for us. There's some news flow here. Tell our viewers what it is.
Well, as Bajaj Auto is in focus, where company has said that the investment committee of the board of director at its meeting has accorded approval for additional investment in the equity share of Bajaj Auto International Holding BV Netherlands, which is a wholly owned subsidiary of the Bajaj Auto with of euro 125 million, which is equivalent to 1199 crore. And the additional capital infusion by the company is to fund the need of Bajaj International Holding Netherlands towards investment opportunity, and the additional capital infusion will be made depending on the fund requirement or before 28th May. So back of this new stock is up approx 2%.
Okay, so positive news flow for Bajaj Auto, 1.6% gain on that front. Because coming to you, Havells is the stock that you've picked out for us. Give us a sense of what are the levels you are spotting, because any chart you pull up, right? YTD, 1 year, 3 months, 6 months, the stock is absolutely subdued, has not done anything at all. Do you believe that now there is some cause for momentum on the stock going ahead, or do you expect these flattish levels to continue for some more time?
We believe the momentum would be back because the flattish levels would not continue, because the stock has witnessed good amount of support near to its 200-week average and witnessing strong amount of move from those levels. No doubt over the last few days where the broader markets outperforming, the Nifty is not, levels is not yet performed, but we believe with the relative effect in the overall consumer space like Crompton has outperformed today, Havells would be a key contender. So on a relative valuation basis, the Havells looks pretty attractive. So see some amount of more move. On the higher side, first potential target could be near to 1680-85, and if that is being crossed, 1730-1750 could be possible. So we remain constructively positive on the stock.
Positive outlook coming in on Havells India. Let's move on and talk about NCC, another stock that's doing pretty well for itself in today's trade. In fact, pardon me, it's down in today's trading session. A 3% cut coming in. So it's a big mover in today's trade. Revenue has come in at 6,131 crore rupees, which is down 5.5% on a year-on-year basis. Largely weak set of numbers coming in from this company. Net profit has come in at 259 odd crore rupees, which is up 8% year-on-year. EBITDA is also up 1% year-on-year. Margins have also expanded at 9.1% compared to 8.5% on a year-on-year basis. Now, what would explain the move that we're seeing on the stock today, despite an expansion coming in PAT, EBITDA and EBITDA margins, is that if you take a look at quarter four's revenue from construction, that came in at 6,092 crore rupees, which was down 3.7% on a year-on-year basis. But the real lackluster element in this earnings outlook, earnings roundup for NCC is the real estate revenue that came in at just 38.43 crores, which is a cut of roughly 74% on a year-on-year basis. A big drop coming in over there. The real estate segment has not done anything at all. In fact, it's given negative returns. And on the back of that, NCC is lower by 3% as we speak. But because Cyient is the stock that you've picked out for us on the charts, it's a stock that we don't usually discuss on the show, not that frequently rather. What's your outlook on Cyient, and what are the key levels that you're spotting?
So look at Cyient has simulated its almost 61.8% retracement of the entire move what it has witnessed over the past few years. The stock has also completed a price-wise correction, a time-wise correction almost 21 months. The stock has witnessed good amount of move from the lower range of around 1175, 1170, and post the results, the stock is going continuously inching upwards. The mid-cap IT space looks continuously attractive. Cyient Limited has also invested into one of the subsidiaries, the semiconductor side. So we believe the stock is poised for a strong amount of upmove. On the higher side, the stock can test near to 1450 to 1480 levels because it is continuously inching upwards over the past few weeks, and the stock would continue to outperform.
So a bullish outlook coming in on Cyient Limited as well. Let's move on. Rabinder, Balrampur Chini is the stock that you've picked out for us. Tell us what's the news flow. Why is the stock in focus today?
Whereas Balrampur Chini Mill is in focus, where company has announced its Q4 number, and company reported a steady performance for the quarter with the consolidated revenue from operation rising to 5% year-on-year basis to rupees 1,504 crore as compared to 1,434 crore in Q4 FY24. And if we talk about PAT, then PAT increased by 13% to 229 crore, up from 203 crores in Q4 FY24. And if we talk about EBITDA, then EBITDA also saw a 6% rise, coming to at rupees 365 crore as compared to 345 crore year-on-year basis. Meanwhile, company's EBITDA margin remains stable at 24% year-on-year basis. So a mixed set of number from Balrampur Chini Mills, and the stock is down 1%.
Okay, so that's the reason why the stock is in pressure today. It's an earnings candidate, slightly weak set of numbers coming in. But let's move on, and because you've picked out Concord for us, Container Corporation, last 1 year the stock was lower by 30%, but on the flip side, last 5 days itself the stock is up 6% odd. Tell us what is driving this run up, and do you believe that this strong move that we've seen in the last week itself, do you believe that this could continue on the charts going ahead too?
So look at the PSU basket, looks pretty attractive. It was the defense. Today we have the railways. So the other part of the BSC index and the CPSC index stocks looks pretty buoyant. The stock has been in a falling trend line over the past many months. But if you notice, the stock has some amount of silver lining been noticed near to 675, 680 levels. So good amount of price consolidation has been taking place for many weeks. Today the stock has broken up with strong volumes in price action by more than 4%, 5%. So we believe it gives a secular amount of upmove. And with the way PSU baskets stocks have been moving, we believe the stock is ripe for a stronger breakout. On the higher side, the first potential target could be near to 780, 85. And if that is being crossed, 840, 850 could be also expected.
Okay, so that's the take on Concord. Let's move on and talk about Bharti Airtel. This is a stock that's in focus on the back of block deals. Promoter Singtel has sold 1.2% stake in the company. That's what they have said. Singtel has trimmed its stake in the company to 28.3% from 29.5%, and they've said that raising aggregate gross proceeds of Singapore dollar 2 billion is something that this deal will lead into. They've said that the transaction will generate an estimated gain of Singapore dollar 1.4 billion as well. What we understand from agencies is that Singtel sold stake as part of its active capital management approach, and shares were sold at a price of 1,814 rupees per share. The pricing was determined on an arm's length and willing buyer, willing seller basis. The transaction was executed via a private placement which was largely oversubscribed. The large majority of the transactions were sold to domestic mutual funds and international long-only funds, and we'll be getting more details about the buyers of this block deal after market hours today. From the term sheet seen by ET Now, we believe that 4.76 crore shares have changed hands, and of course details, the fine print of this block deal will be seen post market hours today. So that's one stock that was in focus on the back of a block deal. But Rabinder, the second one, JSW Infra as well, in focus on the back of its block deal. Tell us what's the update on that front.
Well, as JSW Infra 2 is in focus on back of block deal, where JSW Infra witnessed a major block deals with 42.4 million shares traded, which is a 2% of the company's total equity changing the hand. And according to details reported by the Bloomberg News, the Sajjan Jindal Family Trust is offloading shares worth up to rupees 1200 crore in JSW Infrastructure, and the deals involve offering up to 42 million shares, which is equivalent to 2% of the total outstanding shares at a floor price of rupees 288 per share, and the price reflect a 3% discount to Thursday's closing price to 97.05. And additionally, a 60-day lockup period has been placed on the seller from the closing date, while any unsold portion of the proposed sale will be carried to 30-day lockup. So back of the block deal, stock is down 2%.
Okay, so that's the reason the stock is in focus. We'll of course be getting the buyer and seller details of JSW Infra after market hours as well. But because JSW Energy is the stock that you've picked out for us, when I pull up the charts, last 6 months the stock has seen a cut of 30%, and Seems like there has been a little bit of a recovery, but not all that much from those lows. Tell us what are the next key levels to watch out for.
Look at the stock was under pressure with respect to the result expectations. But the result came in yesterday and since the stock has seen not major sell-off. With the management guidance coming through and positive outlook, we believe the stock is poised for a strong amount of upmove. It has made some amount of good bottom-up formation near to 465, 480 odd levels. It is on the verge of a cyclical breakout of above 510, 515. Once that is being crossed, the stock would see strong amount of positive momentum. So we believe with the event being placed out and the stock's recovery from current levels, the stock is risk reward ratio remains favorable. So we remain positive on the stock with a first immediate target of near to 565, 570. And if that is being crossed, then 620 could be possible.
620 on the upside, optimistic level to watch out for on JSW Energy. But we also interacted with their management because with rising power demand, JSW Energy is ramping up its capacity with a 1.3 lakh crore capex till FY30, aiming to drive future growth. They also see 3x EBITDA from here on. This is what the management told us. Let's go across and listen in.
We have registered 24% increase in generation, but we have to see that in the case of RE, the generation has been higher and in which wind capacities which we have been adding during the year have registered a growth of 67% in the generation. We have done a large acquisition in the month of March of KSK, and for which the funds which we have raised have been at a cost which is based on the past performance of the plant. The current year, we have added 1.7 gigawatt of renewable capacity, out of which 1.3 gigawatt is the wind capacity.
Okay, so that's the word coming in from the management at JSW Energy. Ravinder, coming to you, the stock that you've picked out for us is NOSIL. It's an earnings candidate. Tell us what the earnings look like and take us through the earnings fine print.
Well, as on back of Q4 earning, NOSIL is in focus, where company reported a muted performance for the quarter, where company reported revenue at rupees 340 crore, which was down by 5% year-on-year basis compared to 356 crore in the same period last year. And if we talk about EBITDA, then company's EBITDA dropped sharply to 24% year-on-year basis in Q4 FY25, coming at rupees 34 crore as compared to 45 crore in Q4 FY24. And while margins also contracted to 10% in Q4 FY25 as compared to 13% in last quarter, and as a result, if we talk about PAT, then PAT also fell significantly to 21 crore, down from 42 crores in Q4 FY24. So back of the weak Q4 number, stock is down more than 6%.
Okay, so that's the reason the stock is in pressure today. Weak set of numbers coming in. Profit is almost halved. But because coming to you, Syngene, another stock that we don't usually discuss on this show. If you pull up the charts of Syngene for the last 6 months, 3 months, intense pressure is what this stock has seen. Do you see a turnaround story going ahead on the charts?
Let to be a little bit contrarian in terms of Syngene. As you can look at, the stock has witnessed a good amount of sell-off. But post results, it has maintained the same amount of it. A bullish engulfing pattern is being created into the name after a continuous fall of 21 weeks, so which indicates a bullish reversal is being taken in place into the current trend. So we expect the stock to see strong amount of performance. No doubt the pharma sector has remained on sidelines with respect to the tariff announcement, but since then we have witnessed good amount of performance into Cipla. Dr. Reddy posed the numbers, so Syngene could also have a rub-off effect. So we remain positive with a bullish engulfing pattern, and oversold pattern suggests a strong reversal. 695 to 710 would be the first targets, and if that is being crossed, then 740, 45 would be expected over the next few months.
Those are quite the significant upside levels coming in on Syngene. Let's move on and talk about another stock that's in pressure today, that's IndusInd Bank. Now, their internal audit department, which is the IAD, has submitted a report which revealed that an amount of 674 crore has been incorrectly recorded as interest income across 3 quarters for FY25. IndusInd Bank clarified that this entire amount was subsequently reversed as of 10th of January. Furthermore, the bank stated that following a whistleblower complaint, their IAD was tasked with examining the transactions recorded under the categories of other assets and other liabilities. In its findings, also dated 8th of May, the audit department reported unsubstantiated balances amounting to 590 85 crore rupees under other assets. On the back of this, trouble continues to brew for IndusInd Bank. Lots of accounting discrepancies now coming into surface. And on the back of this, Investec has downgraded the stock to a sell rating versus hold. And target price has come in at 650 compared to 700. They believe that 674 crores of this other income would translate to a loss of 18 bips on the NIMs, which is a huge loss. CLSA has also downgraded the stock to a hold from outperform earlier. So multiple downgrades coming in on this stock, and the stock has recovered from the day's lowest point. Nonetheless, a 1.8% cut coming in. But Ravinder, take us through LIC Housing Finance. We've had some strong commentary also coming in from the management. Tell us the earnings fine print and also why the stock is in focus.
Well, yes, LIC Housing was on back of Q4 earning, where LIC Housing Finance delivered a steady performance in Q4 FY25 with the company's NIMs improving to 2.86%, up from 2.7% in Q3 FY25, an increase of 16 basis point of NIMs, and the company's stage 3 exposure at default EAD improved to 2.47%, which was down by 28 basis point from 2.75% quarter-on-quarter basis, indicating a better asset quality. And if we talk about loan disbursement for the quarter, then the loan disbursement for the quarter stood at 19,156 crore, which was up by 5% year-on-year basis from rupees 18,232 crore. Meanwhile, the total loan portfolio grew to 3,07,732 crore, marking a 7.2% increase year-on-year basis compared to 2,86,844 crore in the same quarter last year. So a good set of number, but the stock is reacting oppositely, and the stock is down 1%.
Okay, well, reverse move coming in on LIC Housing. But we also caught up with the management. Tribhuvan Adhikari, the MD and CEO of LIC Housing Finance, said that he expects a rate cut from the RBI in the June MPC meet. And with this rate cut, he sees the cost of lending to go down. Let's go across and listen into an excerpt of the conversation we had with him earlier in the day.
I'm expecting a rate cut in the MPC of June. So with these rate cuts around the corner, there will be, because cost of borrowing has to go down. We have to pass it on to the borrowers. Our experience so far, as per the cost of lending has to go down. But the cost of borrowings have not been impacted so much. There is, yes, they have gone down partially. I will not say they have not gone down completely. But it's not gone down to the extent of the repo rate cut. So it will be a wait and watch, but I'm quite sure that the NIMs would hold anywhere between 2.6 to 2.8 this year also. Of course, attempt will be to take it higher, but this is the guidance I would like to give for the current financial year.
Okay, that's the word coming in from the management of LIC Housing Finance. But with that, we're out of stocks on this edition of Market Fatafat. Vikas as well as Ravinder, thank you so much for joining us. But let's go across and revisit the word that we had earlier from S. Narain, the ED and CIO at ICICI Prudential AMC. He spoke to us on where he's spotting risks in the market, important outlook and an important voice to listen to. Let's go across and listen in.
I think the risk in this market continues to be in the derivative segment, particularly the weekly option segment. I would say that is one of the markets. If you see even today, I think on the weekly settlements, the market turns out to be very volatile. And that is one area where I would always tell retail investors to do less. And second is, I would say, when they are investing in IPOs of loss-making companies, I think they have to be much, much more careful. So I would say that is a second area. And I think now I don't hear so much of conversations on SME IPO. That was a third area of risk, but I'm not hearing so much in the recent past. I don't know what's happened because we don't participate in that segment. But I would say that is an area which seems to have become smaller. As that boom come down, I don't know, but maybe it has come down. So I would say that was a third area. And I think as such, we are worried that too much of money comes into equity from people who think that equity doesn't deliver negative returns. And again, the quick rebound has given again the feeling that equity doesn't give negative return. It's a very, very tough time. So I think it's a time where you allocate money across asset classes and not choose one asset class. And at the same time, today focus within every asset class on the safer parts of the asset class because of the way the markets are at this point of time. Does it mean that the markets are going to fall? No, because I think India is one of the best structural stories and where the macro has been handled brilliantly over the last decade. So India doesn't look to be the market which is at risk at this point of time, but at the same time, it is not a market which is value at this point.
Okay, that's the word coming in from S. Naren. But with that, we'll wrap it up on this edition of Market Fatafat. Thanks so much for watching. But stay tuned to ET Now because we have a very special earnings roundup show coming in right after this.